Hello folks, this is Jimmy Nelson from Nelson Financial Strategies with an August 2017 Educational Economic Update. In this video, we'll talk about some of the economic headlines that influenced markets in July and give you some insight into what they could mean for you as an investor. Please stay tuned at the end for a required disclosure statement. After a lackluster start of 2017, the U.S. economy quickened this spring, powered by strong consumer spending, which was helped by a steady labor market. The Commerce Department has said that growth in the gross domestic product, or GDP, which is the economy's total output of goods and services, expanded at a 2.6% annual rate in the April through June quarter. That's more than double the revised 1.2% pace in the first quarter. A slow first quarter followed by stronger growth in the spring has been a familiar pattern over the last several years. Because of it, the government began combined efforts to manage shortcomings in the government's seasonal adjusted process. Even with this spring rally, though, economic analysts do not think it will meet the ambitious targets set by President Trump, who pledged to boost growth to rates of 4% or better. For 2017, economic experts believe growth will come in around 2.2%, which is where growth has been since the Great Recession recovery began in mid-2009. Much of the April through June strength came from consumer spending, which accounts for 70% of economic activity. Spending grew at 2.8%, up from 1.9% in the first quarter. The economy also benefited from modest inventory reductions that hindered first quarter growth. In other key categories, business investment in plants and equipment grew by 5.2%. However, housing construction fell by 6.8%. This comes after a surge in winter because of warmer than normal weather. A national home builder organization has said that land and labor shortages are limiting the pace of construction, even as the nation faces a shortage of affordable housing. Economists predict that housing will resume growth in the coming quarter. Internationally, the U.S. dollar was weaker at the end of July. U.S. stock futures were pulling back, and European markets were in negative territory. But the Dow Jones Industrial Average, S&P 500, and NASDAQ all hit record highs at month's end. Technology stocks took a pounding because of now familiar speculations about overvaluation. A decline in healthcare and industrial stocks also had negative consequences for the S&P 500, and gains in telecoms, energy, and the consumer stocks did not offset these losses. Even so, these rate-sensitive sectors felt broad-based gains after the Fed refrained from raising interest rates. So that's it for the August Educational Economic Update. As always, if you have any questions or concerns about what we've discussed, please give our office a call at 863-676-7995. We'll see you again in September. And once again, this is Jimmy Nelson with Nelson Financial Strategies, signing off for the month of August 2017. Please remember that nothing we talk about here is a recommendation. If you would like to discuss your personal financial situation, please give us a call. We're happy to talk to you. Securities offered through Triad Advisors, member FINRA SIPC. Advisory services offered through Lineweaver Wealth Advisors, LLC. Lineweaver Wealth Advisors is not affiliated with Triad Advisors. And while we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision. Investing involves risk, including the potential loss of principal. No investment strategy can guarantee a profit or protect against loss in periods of declining markets. The indices mentioned are unmanaged and cannot be invested into directly. Past performance does not guarantee future results.